Hey, welcome back. It's Jason Walter here. I noticed that Fannie Mae actually provided a new housing market forecast for the remainder of this year through 2023. So in today's video, I'm going to give you a breakdown regarding their latest housing market forecast according to Fannie Mae. So they provide predictions regarding home sales and also home prices and much, much more. So with that said, let's go ahead and dive right into the video here. And of course, if you guys are looking to buy or sell a house anywhere in the United States, then check out homeandmoney.com/Jason to get started today. And with that said, let's go ahead and begin today's video. This is a forecast that was actually just published today at the time of this video, which is July 20th. It says here, housing is increasingly constrained by high mortgage rates and of course because of our slowing economy. They have what's called a Fannie Mae Economic and Strategic Research Group, or their ESR group, and they are now projecting a recession to begin in the first quarter of 2023, which is earlier than previously forecasted by them due to the aggressive monetary policy response that's required of the Federal Reserve to bring inflation down from its current 40-year high. Obviously, if we go into a recession, that's going to be affecting our housing market and our economy as a whole. But they went on to say the following here. By Q4 2022, this group here expects inflation as measured by the CPI to have moderated to 5% on a year-over-year basis, down from the June reading of 9.1% that we have right now, and then down to 1.6% by the end of 2023, below the Fed's 2% target range. And here's what they had to say regarding home sales as well as home prices. It says here this ESR group revised downward its forecast for total home sales in 2022 to a decline of 15.6%. So they're calling for home sales to decrease by 15.6% this year. This is compared to a decline of 13.5% that was previously predicted last month. However, though, they revised upward their housing market predictions for home price appreciation. They are forecasting for home prices to increase by 16% year over year in 2022. In other words, from January 1st to December 31st of this year, they're predicting that home prices are going to increase 16%. And this is much higher than their previous forecast, which was calling for a 10.8% increase of this year. So I'd love to hear from you guys regarding this because they're calling for home prices to increase by 16% this year. So I actually took a step back and looking at, okay, what has happened so far this year and what would be needed for the second half of this year in order to have home prices to increase by 16%. So I did some digging for you guys in order to find out what's needed in order to get to this 16% number by year end. So here's the latest trends we have from Redfin. So as of January, our median sold price was $376,000. And as of right now, as of June 2022, the median sold price is $428,000. So we've increased from $376,000 now to $428,000. So if we want to have home prices to increase by 16%, that's our forecast. Have a look at this. So $376,000 as of January. Let me get super nerdy on you guys. 376,000 times 1.16. That would mean for it a 16% increase. Home prices by December, or by the end of the December. So that's $436,160 by year end. So in other words, for home prices to get to 16% growth rate by year end, or for 2022, we basically have to go from 428,000 from June of this year up to 436,000. So in other words, we only need to see home prices increase by $8,000 by year end. So again, I'd love to hear from you guys regarding this because during a normal housing market, it would be entirely normal for home prices to basically plateau for the second half of this year. So they're basically calling for that for a normal housing market this year, basically, because they're basically calling for home prices to basically plateau from now until December of this year. I feel that's a little bit ambitious, but I'd love to hear from you guys. What do you guys think? And going back to this housing market forecast from Fannie Mae, they went on to say the following. This group anticipates strong deceleration in home price growth going forward due to lagged effects of high mortgage rates and the slowing economy weighing on purchase demand. It just goes to show that our housing market is very slow to change due to external factors regarding mortgage rates, for example. In stark contrast, the stock market moves very, very quickly. For example, we've only had mortgage rates above 5% for about 3.5 months. So the average 30-year fixed surpassed 5% back in the first week of April of this year, and more or less has been increasing ever since then. So about 5% at the beginning of April, and now we're at approximately 5.7%. And according to Doug Duncan, who's Fannie Mae's senior vice president and chief economist, he stated the following: with inflation running well above the target rate, the Fed's target rate that is, the market's expectation that further substantial monetary tightening is needed has driven interest rates even higher. Of course, our housing market is slowing down in response to this, and we're seeing more price reductions right now, and both construction and home sales, both existing and new home sales, are slowing. And here's some additional information regarding their forecast for total home sales as well as home price appreciation over the next several years here. It says we revised lower our forecast for total home sales in 2022 to 5.82 million units. This is a total home sales. This includes existing houses as well as brand new houses. And this forecast of 5.82 million home sales for 2022 is a 15.6% decline from 2021 and steeper than the previous housing market forecast for a 13.5% drop. In regards to their housing market predictions for home prices, they actually revised upward their forecast for 2022 to a 16.0% growth, as I mentioned here earlier in this video here. And that's up from the previous forecast of 10.8%. And this change was driven in large part due to stronger incoming actual price growth through the second quarter of this year. However, though, they still anticipate a strong deceleration in home price growth going forward as the lagged effects of higher mortgage rates and a slowing economy weigh on home purchase demand here. Home price growth could also moderate, though, at a faster pace than currently projected. And taking both sales and home price forecast changes into account here, they have actually revised lower their forecast for 2022 for mortgage originations to $2.53 trillion. The previous forecast was calling for $2.6 trillion. So here's a table showing their housing market forecast through 2023, and they're looking at housing starts, both multifamily and single family, total home sales, which include, of course, new single family as well as existing home sales, as well as the percent change in their HPI, which is basically their home price index, which of course is home price appreciation. They're also looking at average rates for the 30-year fixed rate mortgage through 2023, and looking at mortgage originations as well for purchases and refis. So let's first talk about housing starts, or total housing starts, which include single family and multifamily. So everything in white here has already happened. And in gray is basically their forecast. They basically have not wrapped up Q2. So for whatever reason, they don't have that in this forecast here. I would imagine in their August forecast, they will provide actual Q2 numbers here. But right now, this is their forecast for the remainder of 2022 and also in 2023 by quarter. And over here, they have by year. So obviously 2021 has already happened, but here's their Q4 to Q4 housing forecast for 2022 as well as 2023. So anyways, just kind of want to get the lay of the land here. Let's first talk about total housing starts. So for Q1 of this year, we had approximately 1.72 million total housing starts in the US. But look at this, every single month thereafter, it decreases every single month. So in 2021, we had an increase of 16% year over year of total housing starts compared to 2020. But look at this, the forecast for 2022 is calling for a 4.8% decrease of total housing starts. And in 2023, look at this, down 17% from 2022. So they're calling for a big decrease in 2023. I would suspect because they're calling for a recession in the first quarter of 2023. Let's look at single family though. Single family housing starts. And by the way, a housing start is basically the beginning phase of the construction of a brand new house. So single family housing starts are also decreasing every single quarter as well. Basically decreasing from 1.2 million for Q1 down to 842,000 in Q1 of 2023. So in 2021, we had a 14% increase of single family housing starts. But look at that, 2022 decreasing by 9.2%. And look at that, in 2023, the share basically doubled from 2021, down almost 17%. Look at multifamily. So multifamily, look at this. So Q2 of this year, they're basically calling for a slight increase. If I recall from their their June forecast, that was also the same as well. So they're calling for a slight increase in Q2 of this year, but then decreasing thereafter. So for multifamily housing starts, look at that, 22% in 2021. And in 2022, increasing by 5.9%. A big difference between single family and multifamily, right? If you guys follow the channel, you guys all know that a lot of builders right now are really focused on building 5 units or more. And those are apartment buildings in order to rent out. And they're really shifting away from building single family houses because single family, or the business of selling single family houses, is tied more directly to mortgage rates. And mortgage rates have been increasing greatly this year, increasing about 2.75 percentage points over the past 12 months. In any case, that's just a kind of background there. But look at this. So single family in 2022, they're calling for that to decrease by 9.2%, but they're calling for multifamily to increasing by 5.9%. But look at 2023. Basically, everything is negative here, right? So multifamily also down more actually than single family, down 18% from 2022. So let's have a look at total home sales. Total home sales, of course, include new and also existing houses as well. I would mention, though, new single-family houses, the number of houses that actually sell is far less compared to existing home sales. You actually can see that here as well. So look at this. So new houses for Q1 of 2022 was only 779,000 houses, but for existing houses, which include single-family condos and co-ops, that number was just over 6 million. And by the way, I actually made a mistake. I believe these are seasonally adjusted annualized rates. So we're not seeing 6 million home sales in Q1 and then 5.2 million home sales in Q2. These are seasonally adjusted annualized rates. I made a mistake. I believe I mentioned this is probably per quarter, but these are all seasonally adjusted annualized rates regarding home sales here. That also includes here total home sales as well, adjusted rates for that are annualized. Anyways, let's take a look at this because new single family houses are decreasing every single quarter as well. So for new single family, actually decreased by 6.2% in 2021. But look at this, down 13.4% this year, and then decreasing by 9.5% in 2023. Existing home sales, the current pace right now for Q1 is 1.1 million basically. That basically means that the current sales pace for Q1, we would basically have, if you extrapolate that for the entire year of 2022, at the current sales pace, we would have 6.057 million home sales for existing home sales. So take a look at this because every single month or every single quarter after this, existing home sales have decreased. So for 2021, we had an 8.5% year-over-year increase. But look at this, 2022 decreasing by 16%, and then 2023 decreasing by almost 12%. So let's have a look at Fannie Mae's HPI, or their home price index, which is an index based on home price appreciation. So for Q1 of this year, year over year, their HPI increased by 20.5%. In other words, their HPI increase from Q1 of 2021 to Q1 of 2022, their HPI increased by almost 21%. But every quarter after that, look at this big decrease. So Q1, 20%, but look at that. In Q1 2023, it basically goes down by half. So only about 11 for their index there. And overall for a Q4 2021 to Q4 2022, increasing by 16%. Also in 2023, only increasing by 4.4%. So in other words, they're calling for home prices to basically decelerate. In other words, we're still seeing year-over-year increases in home prices, but compared to a quarter or quarter to quarter, it actually is decreasing. Okay, let's have a look at their forecast for the average 30-year fixed rate mortgage. So for the average for Q1 of this year, it's 3.8%. Pretty astonishing because right now, mortgage rates in the range of 5.5 to approximately 6%. So they're basically calling for mortgage rates to increase to 5.5% for the average for Q3 of this year, and basically to stabilize through Q1. So Q2, they're calling for that to actually decrease, and actually to decrease for the remainder of the year in 2023. So the average, look at that, the average across all of 2021 was 3%. They're calling for the average to be 5% this year and to increase only slightly to 5.1% in 2023. Next, let's have a look at single-family mortgage originations. So take a look at this. So for Q1, we're basically at 740. That's basically almost half compared to Q1 of 2021, by the way. But look at this, every single month, more or less, has been decreasing, except right here, it starts increasing in Q2 2023. So for total single-family mortgage originations, this includes purchases and refis. In 2021, we basically had, I believe that's actually is in billions of dollars. Yeah, it's in billions of dollars. So sorry, this is actually $4.4 trillion for 2021, but in 2022 it actually decreases to $2.5 trillion, and in 2023 it decreases again to $2.2 trillion. So pretty remarkable that in 2021 compared to their forecast for 2023, it's basically half as much. But the differences are even greater when looking at refis. So refis, we reached $2.6 trillion in 2021. But look at that, 756 million in 2022. And then in 2023, it falls even further. Interesting enough that purchase originations, they're basically calling for that to basically stabilize from 2022 through 2023. And last but not least, let's look at the refinance share. These are the percent of mortgage originations that are refis. So 70% of all mortgage originations, or all single-family mortgage originations, were for refis back in Q1 of 2021. But look at how this has decreased ever since then. So in Q1 of 2022, it decreased to 48%. But now they're calling for that to decrease to 19% in Q3 of this year, and then to decrease to 30% for 2022 overall. And in 2023, to decrease to 23% of all mortgage originations to be refis in that year. So in other words, what a difference, right? So their forecast for 2023 is calling for 23% of all mortgage originations to be refis, but compare that to Q1 of 2021, it was 70%. So comment below with your biggest takeaways from today's video. Thank you so much for watching today's video. If you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.